Noriko Kuroki, who's a portfolio manager of the emerging market equity space at JPMorgan Asset Management, joins us now to talk about how she is looking at India as a space. Noriko, hi, good morning, and thank you for being with us this morning. Very important week of trade. We get the election verdict on the 16th of May. India has attracted the highest amount of flows amongst the fragile five, but do you think that trend could continue?
Hi, good morning. Thanks very much for having me on your show. India has had a good run up to the elections, but we still see good value in Indian equities. Perhaps not the time to add aggressively at this stage, because India has had a good run, as I said. We were adding aggressively in the third quarter last year when India saw a sharp decline, both currencies and the market. We are still happy with the names we hold in our portfolios, but from now, I think what's more important is what sort of government we're going to see after the election, what sort of policy initiatives we can expect from the new government. So for now, we are watching closely the election outcome, and importantly, what sort of policy measures the new government is going to announce.
So, good morning, Noriko. Thanks for joining in. So, should we assume that from now up until Friday, when the actual numbers come in, people like you will rather not participate, just wait and watch?
Yeah, history tells us, actually, betting on the election is rather a futile outcome. Politics, we are not experts on politics. We look at companies, we look at fundamentals of the companies and the economic developments. So I think it's too risky to bet one way or the other just for the pure outcome of the elections. We'd rather focus on what we are better equipped by looking at companies. We are long-term holders of companies, so short-term noises we try to ignore, but look at the long-term fundamentals. And this election is very important for India's long-term future. So we are very much interested in the outcome, but rather than taking short-term actions, we'd rather stay and watch for now.
That's perhaps the most prudent thing to do. But Noriko, you just mentioned a while back that you aggressively bought some stocks in the rally from September till now. What are those stocks that you are holding on to?
So we like consumer discretionary and also IT service sector. So yeah, auto names or consumer discretionary names are more attractively valued than, say, consumer staples. So that's one area we very much like. And we also like the IT software sector, because we think that the IT outsourcing is still at an early stage globally. So these blue chip Indian companies can continue to grow for many years to come. So that's a kind of structural positive view that we have for the sector.
Okay, but actually for the past, since September probably, when the fragile five currencies started stabilizing and improving, the trade has actually been with cyclical stocks and away from the dollar stocks. Well, for one thing, dollar was getting cheaper vis-a-vis the Indian rupee. Today it is at some kind of a record low versus the rupee. Would you therefore prefer a rotational trade away from the dollar-exposed trades to the rupee-exposed trades to the Indian economy, cyclical exposed trades?
Yeah, interesting, because we look at the currency from a longer-term horizon, so we tend to focus more on 5 years rather than just 9 months. And Indian rupee got really, really cheap when it got sold off aggressively. And it's actually still, even after the rebound, it's still one of the cheaper currencies in the EM space. So we're actually quite comfortable with the where the currency is right now, actually. We see more upside in the currency rather than...
More upsides for the rupee, is it? From even current levels?
Yeah.
Okay.
Yeah. For, we are not talking about, next 3 months, 5 months, but we are talking about longer term horizon. But relative to the fair value we see, Indian currency still looks undervalued.
Okay, that's That's a relief to hear compared to those days of 68. This is far better for the Indian rupee. But, you know, everyone is hoping that once the new government comes, the reform process will get sped up, and a lot of the infrastructure, capital goods sectors will see a pickup in activity. Would you bank on that hope and invest money in these sectors?
We do see good value in the sector, but you know, the devil is always in details. You know, execution is the key, and so that's why I said we'd rather wait and see for now, because you know, there's a huge potential, you know, huge value to be unlocked in the infrastructure space. But we also know that in India, execution always probably takes a bit longer than what you'd have hoped for.
Okay.
But you know, there are some interesting investment opportunities. So yeah.
I just
Noriko, just a word on the Bank Nifty. It is at an all-time high now, and 14,000 as a level has been scaled by the Bank Nifty. That was historic. There were analysts telling us in the morning that the Bank Nifty could do better, and 14,000 has been scaled. I think Sudarshan specifically referred to the Bank Nifty as well, and that's at an all-time high. 14,000 has been scaled. Finally, Noriko, you know, what is the fund flows position towards emerging market likely to be in the remaining part of 2014, and what will be your pecking order in the emerging markets, the best 2 or 3?
Yeah, so for the emerging market as a whole, it's been a disappointing or tough year. We saw a lot of outflows in January and February. In March, the flows turned small positive, but April, again, it's kind of going sideways. So investors are pretty much looking for earnings pickup. We haven't really seen clear signs of earnings pickup. Now, India is one of the markets where we've probably seen a sharper turnaround, because GDP growth rate came down ahead of the rest of emerging markets. So it's, in a way, ahead of the pack, in a sense that GDP appears to have turned and earnings appear to have turned. So going forward, we think earnings will be the key, and India, from that regard, seems quite well positioned. Perhaps valuation-wise, not as compelling as some of the cheaper emerging markets, places like China and Russia, where valuation has been really beaten down. So for India, perhaps, you know, the clearer signs of earnings pickup will be a further catalyst for the market.
All right, Noriko, thanks so much for joining us and giving us your views. That's the word coming in from JPMorgan Asset Management. They say, now hold on. If you had made any aggressive bets till now, it was fine, but just hold on and wait for the election verdict to come out. By